Good evening. This is the Eye of the Storm podcast for the NASDAQ 100 and the S&P 500 for Sunday, August 21st, 2022. As I begin this podcast, I have received several comments and over the last couple of days that basically were asking the question as to whether or not this entire sequence, why would it be completing only intermediate wave A? Can it be completing the entire B wave? And that brings about a conversation that I've decided to go back and do just so that people have an understanding of how I'm reaching these counts and why, while that possibility may exist, it's not necessarily likely. So let me go into a conversation that's really going to go about understanding a little bit of how these corrections unfold. So back in when Elliott was writing and talking about corrections versus impulse moves, he said that corrections will likely be held to two basic structures, either a zigzag form, which is a zigzag, or a flat form, which is ABC, flat. And so a zigzag suggests that waves A and C will be 5-wave structures, with a B wave being a 3-wave structure. So again, we're going under the premise that all corrections, all these corrective waves, will form 3-wave structures, A, B, C, and those will remain consistent throughout this entire corrective process. So the zigzag would be that waves A and C are 5 waves, wave B being a 3-wave structure. The flat correction suggests that waves A and B will be 3 waves, with wave C being a 5-wave structure. The flat designation comes from the overall pattern holding within the high and low set in wave A. However, here's the additional observation by Elliott. Within that flat designation, there are approximately 13 different patterns the market can take to complete the pattern. So establishing which pattern is unfolding, zigzag or flat, helps us to determine the larger structure in progress, but is understanding the building blocks theory that will answer the question of, could we consider all of this as being the entire primary B wave? So as I have discussed within my updates and within these podcasts, the wave principle lays out the theory as being a series, what I call a building blocks. So the wave principle is telling us the theory is being built or based on what I'm calling our building blocks. So these building blocks form the degrees in which the market is always operating. These degrees are labeled as minor, intermediate, primary, cycle, and supercycle. So all degrees of trend operate within the same basic structures. For example, impulse moves consist of 5 waves in the direction of the trend and are labeled as 1, 2, 3, 4, 5, and are followed by 3 waves in a counter-trend move, which is labeled ABC. The building blocks idea then takes hold as follows. A complete move is considered such after the completion of an impulse move, 5 waves, and a counter-trend move, 3 waves. Therefore, after the completion of 8 waves, the formation of wave 1 of 1 degree higher is in place. Now, understanding that all degrees of trend operate in the same direction will produce the same pattern. So back to our current picture. At the all-time highs, which were reached at the beginning of 2022, those moves, what that move finished with 5 waves up on an intermediate degree, on a primary degree, on a cycle degree, and on a supercycle wave 3 degree. So with the trend change from impulse to corrective beginning on a supercycle degree, all subsequent degrees will form ABC structures, an ABC on primary cycle degree, a primary degree, and an intermediate degree. Okay, so having saying again, what I'm really talking about is if we are in a super cycle wave for correction. Remember, counter trend corrections counted letters, 3 waves, A, B, C. But those 3 waves are going to happen on a cycle degree, which will consist of 3 waves of primary degree, which will consist of 3 waves of intermediate degree. So it's important to also keep in mind that each internal ABC, those waves, will each unfold as either a zigzag or a flat. So now we're building how these building blocks are going to come out. And now we're starting to put together where, as we go up in degree, the moves themselves will be bigger and more powerful. So back to the charts. So off of the highs up here, it would appear that the market has completed an ABC down of intermediate degree. Those are labeled in yellow. Intermediate A, B, C. And that in turn, so with that, so if we remember that all degrees in operation will form the same structure, so thus all levels of degree will form an ABC structure. Using this suggests that an intermediate ABC structure will complete for wave A of the primary degree. All right, ABC primary degree consists of 3 waves labeled ABC of intermediate degree. Now we're moving over, and now we're in the primary B wave. What will that primary B wave consist of? 3 waves of intermediate degree to be labeled A, B, and C. A will be counter trend, right? The trend is being down right now, so the counter trend move is going to be up. That's a counter trend move. Wave A, the whole B wave is a counter trend move, actually. And then within it, we have wave A. Now we're going to have an intermediate B wave, and it'll be intermediate wave B of primary wave B. So still in force, still moving. All right, so wave B will also take 3 waves, the form of 3 waves. And on a primary degree, that will consist of an intermediate degree ABC to form that primary wave B. So to answer the question as to whether or not the current rally phase completing intermediate wave A of primary wave B or all of primary wave B becomes clearer. And what I mean by that, I'm looking for an ABC. This would be too small. I'm looking for it on an intermediate degree. Now, having said that, there are different Fibonaccis that we can put into place, one being from this high. So we want to see how high the entire primary wave B can get. Well, we're looking. Right now, the A wave got 50%. Typical. That's pretty much exactly where you would expect it to go. Now we can measure out a B wave, and still we'll have a C wave that is more than likely to get up to these upper levels. So yes, we're going to give a decline in a B wave, and then we're going to go into a C wave. So this decision process, though, must continue to leave open the potential, as was suggested or suspected by the viewers or the subscribers that were letting me know, hey, could this be all of primary wave B? This is not my preferred view, and I would need confirmation from the market. And unfortunately, it's not going to come until the market breaks below the recent June lows. That's the only way I'm going to know whether this entire primary B wave is complete and we're dropping in a primary C wave. Now, I'm not counting it that way. So, but having said this, the turn I believe that is now in process is still a tradable high. And so it's a tradable high in terms of the depth of where I think the next wave pattern will bring us. Ultimately, now again, this is June, this is August. So we have 2 months of rally. If we have an equal amount of decline, we're going to decline now and into September, possibly October. But since markets tend to go down much quicker than they go up, maybe this will be the month and several days, which takes us up to the Fed meeting in September. Just saying, if we're looking at time frames. But in any case, what our potential now is, and I need to just get rid of this one for a while and go back to here. We have the potential to drop. Now, most common for a B wave is that it retraces 50 to 62% of wave A. And then the outlier is that we have potential to go to these levels. Now, so what do I look for initially to begin, right? I'm looking for the formation of this A wave. What can it take? Wave A can be A of the intermediate B can be a 5-wave structure. That's why I keep telling you on an hourly chart, I'm always going to be looking for the first 5 waves down to give me confirmation this rally phase is done. Trend is picking up again, and now we're going to be heading down. But under the current count, that downside could be limited. And it could be limited to here, 12,400 to 12,000. So with the potential that we could go down to 11,500. From current levels, we're looking at 1,000 points. From right where we are, 1,000 points down to here. A little bit more like 1,100. 1,100 points down, that's tradable. That's a tradable move. It should unfold over the next several weeks to a month and a half. So during that period, can you figure out trades that you might want to do? Sure. Do you want to, maybe you're long a stock, just long the stock, and you want to carry that much down? No. So do you want to sell it? Yes. So again, what the decision process really becomes is like, if we're going to listen to outside noise, if we're going to listen to everything else instead of just looking at what the market is doing and what the potential is, and you still are feeling that the market, well, what if they just turn and start to run it back up? I'm going to get out now. If you get out and took your profits and maybe went short, then you're going to have a stop. And that stop is where it's going to tell you, nope, we're not done. We're just going to keep going up. So all possibilities still exist. So one thing that I will tell you, the market is never going to guarantee anything. It's just not what's going to happen. Human emotions don't allow it. And we flip around as quickly because everyone is not truly understanding how the market operates, and so they want to jump. They jump. They don't want to miss. They jump. Right now, if we continue to go, the selling won't get heavy until we're down in here. It actually probably wouldn't get heavy until we break 13,000. Below 13,000, that's a whole nother picture. But by then, we've already dropped 700 points. Right now, off of that high, which we only made on last Tuesday, at 13,741, we're now down 200, 500 points, over 500 points off that high. And 1, 2, 3 days. This is kind of day 4 going into. So can we drop that much? Can we drop another 1,000? Sure. It did the first 5 in less than a week. So potential is there. It is tradable. And if you're just going to trade the future, well, I think there'll be a lot of trades to be doing intraday. And then again, you're going to be making those choices based on a different chart. So again, if we're looking at the depth of the expected decline, we can use Elliott to help us define entry and exits for trades both bullish and bearish, so that as a trader, we participate in the ebb and flow of the markets that can be tracked via the larger degree moves. So I hope that a bit of an explanation helps and trying to determine and just put some not necessarily strategy, but to put some education behind how and what to expect. So again, when we're looking at this chart, we're like, well, that was a pretty big move. Isn't it all over? No. Based on the structure of the advance and what got completed up here, we now need to correct all the way back down those same levels. We go from the bottom up to reach a high. We go from the top down and begin on the intermediate degree to start forming that larger corrective process. So it's this type ABC pattern that's going to continue to repeat and repeat and repeat as we complete intermediate degree, primary degree, and cycle degree. Each time we go up, the moves themselves will be larger. So we're looking for a primary degree B wave. It's going to be larger than the intermediate degree B wave. It's going to cover more territory. But guess what? What comes after that is, in my opinion, another crushing C wave decline. And then that is only going to form primary wave, it forms primary wave C, and in turn completes cycle wave A. Then we're going to move up again in a cycle B, and it'll be a kick butt rally all over again. But what, we can go out to really determine, well, where should cycle or primary wave C take us? I continue to look here. I continue to look for support for this endeavor that the market's taken on at the low of the previous 4 of 1 lesser degree. Well, if I'm looking for where this cycle degree A wave should come in, it's going to be down here. And that's going to equate to, I believe that I can put up the fibs, and they're just retracements. And we have them like 87, 7,000, and then 67, I believe, somewhere in there. So they come in close. And I'd be looking for that to come in that way. And then we do a B wave rally. And if we're rallying off of here, it's going to probably not look as intense as that, because I don't think that we'll be in the same position as the government's funding everything on the planet via, just printing dollars. But it should be a very tradable rally. And then we have another C wave, but on a cycle degree. So it's even bigger and more destructive. And then we are looking out towards these lows. We're looking at the 2009 lows on the broader markets. We're looking at likely maybe a little bit further in the NASDAQ. But right now, even those lows are telling us 1,000. That's 10,000 points. It's 11,000 points, even more from where we are. That's a pretty big drop. I don't know what it'd get it there. I don't know if it will get there. I'm just telling you this is what the pattern tells me. Now we just back it all the way up, because why go there when we still got to get through this? We still have to trade this. When we have to trade that, and then we have to trade that. So I'm not going to be concerned about where cycle wave C will end up when I still have to deal with primary wave B. And then inside that, I got to deal with an intermediate degree wave B, and then another rally up to finish the primary degree B wave. Then deal with the primary degree C wave, one step at a time. Every one of them will be tradable. You don't need to plan out that far, because you'll be paying so much premium to do it. So why even bother? It's not time yet to be planning that far out. It's time to plan for this, and then that, and then the next decline. All right, I'm going to finish with that part. Now, let's go take a look at these markets. I have now, even though I'm still running the 2 counts parallel to one another, I don't want any confusion here. So I've taken off the minor wave 2 and the minor wave 1, which was down here. I made it more clear that we're likely working through a primary degree ABC. This is the finishing of the A wave. We're in the process of putting in that B wave. We finished leg 1, which is the A wave on an intermediate degree. We're now beginning to drop in an intermediate B wave. The immediate fibs that I can put up there, retracements, show us the possibility. So on a Fibonacci basis, a B wave will most often go the distance of 50% to 62% retracement of wave A. Well, that brings us down to 12,400, down to 12,100, we'll call it. Now, is there continued possibility for 11,900, 11,850? Yes. Also down to 11,485, down to 11,300. So we have 11,500, 11,300. Or the whole thing could be a flat. The A goes up, the B wave comes down, finishes somewhere around 11,068, and it's flat. The position, or not the position, the pattern would be A, B. That's pretty flat. Still being controlled by the high and low of wave A. So what comes next is a C wave. I would expect the C wave to at least get back to this level. If it drops all the way down to there, to get back to that level. Before I get ahead of myself, let's come down. And I'm going to bring up the 4-hour chart, leaving up those fibs. Now, again, there's the high last Tuesday. So if I'm counting 1, 2, 1, 2, this is the 3 of 3. Or it's an ABC. Again, needing to just work this through and let the market tell me, right? What am I looking for? Within this intermediate wave B, I'm now looking for a minor ABC. A can be 5 waves. B will always be 3, and C will always be 5. But now we're just working to see what is this A wave and what's it going to present to us. Ultimately, wave B should be ABC. Within it, wave A of this B wave on an intermediate degree, so minor wave A can come off as a 5. That's going to let us know if this turns into 5 that, oh, okay, so we're going to probably do a zig-zag. All right, so it's going to look like that and still get ourselves down to here. So we're looking for 3. We're still in an intermediate B wave. We are in the primary wave A down. We're letting it develop to see where it comes. So where are we finding support? First of all, we should find support at 13,110. That's been there. It's still there. And then what do we have? We have the moving averages. And again, this is 4-hour chart. And then we have the 200 EMA at 12,876. We have fib support at 12,720. We have the SMA, the 200 SMA at 12,686 right now. Continued fib support, that 50% level at 12,404. And then we have continued support. Next one, actually, price support matches right up with 618 at 12,089. Again, we have continued support down. But the market should begin to accelerate a little bit more. Again, waiting for the additional Asian markets to open here in about 9 minutes. And then we will get the European markets to open in about 7 hours. So that will add, because then we got still more, and then it comes back to the United States. So depending on where it is, will depend on what we may see during the day. Because again, remember, if I get this all done and I can count 5 clean, or even 1, 2, 3, 4, 5, and that's just the third, then I'm looking for a small little 4, and then maybe another leg down. Or it's an ABC, and I'm going to look for a little bit more. So again, we're still in the corrective process. They're not all that easy to trade. But when we're in the throes of the leg down, that might make itself a lot easier. And again, I'm talking about the 5-minute, the 3-minute, the 15-minute, which are going to be a lot cleaner to show us what we're going to be doing intraday. Now I want to move this one more time down to the hourly so we can take a peek at where our moving averages are here as well. So again, there's the high. 1, 2, 3, 4. How about 1, 2, 1, 2, 3, 4, 5 of 3? No. So I'm thinking that where I can get this first 5 in is nowhere. So it's still a running. So if this is 1, 2, 1, 2, 1, 2, it's going to go down for a while. Now my hourly is telling me it's subdividing all the way down. So 1, 2, 1, 2. So that's 1, 2, 1 of 3, 2 of 3, 1 of 3 of 3, etc. And now we accelerate very nicely through that. I think that we continue and we'll start to find in our support. Now on the 1 hour, we've broken below. This EMA was broken Friday. And so we actually closed below it. So now it is starting to turn. The 50, if the 50 comes and crosses, the 50's already crossed the SMA, but this is an EMA and this is the SMA in the 50 period. The 50 period SMA is getting ready to cross the 200 period EMA. That should bring downside pressure to the market. Sellers will react. It's my belief, it's my thought, and that's what happens when these things get broken. Now, I'm looking also then for the 50 period EMA to cross and break below the 200 period EMA. That should then start to drive them in. Now, eventually, we're looking for that unity on the hourly chart to give us more support that downside should now continue. So the moving averages are on an hourly chart truly lining up to go down. So upside moves should be determined and held pretty much by the 8 and the 20 moving average. Once we get levels where I can throw Fibonacci retracements onto the market, they're likely going to start lining up right around this, the 8 and the 20. This has been my experience. So upside, I think from here will be held by the 4 to begin with, and then the 8, and then ultimately the 20 should contain even a stronger move from here. Now, let's go over and take a peek at the S&P because it basically should be telling us the same story. Here, here we have in the S&P, it is basically the same story. Those will all line up once I move things out. So coming out to that daily chart, we can see again, very nice and clean. And that could be a 1, 2, we're in that 3. So I did fill in this labeling as well, but I've left those up there. I'm going to take them off just because I need to. Again, I don't want confusion. I am continuing to run them. So again, the only way it comes back in is if the market pretty quickly just starts to collapse and then breaks here 36.39. If it breaks 36.39, then this will all get changed and we're still in this C wave going down. But right now, that's not the case. That's not what I'm banking on. I'm looking at this as a primary B wave counter trend rally. And within it are going to be 3 waves of intermediate degree, an ABC. They will be labeled ABC. Wave A looks like it completed right there at that high at 43.27. And that's from the 16th. And then, so this will move over just slightly. So we're off and running. It does, in my mind, even if I'm looking at the daily, appear to be a 1 or 2, and this is a 3. I'm going to drop right quickly down to the 4-hour chart. Now, what can I put in real quick? Let me open this up. And I got those set up, and this is the low. I'm going to put that there, and I'm going to run this up to that high. So now I'm looking for what are my levels on this B wave. So let me first change that to 39. and this to, I'll make it exact. Let's put 2750. I could put 28. And so now we got our numbers. So again, initially, we're looking for a B wave. That B wave should unfold in an ABC structure. We're in the A wave. Totally, though, we can start to put together a picture that tells us that wave B normally will retrace between 50 and 62% of that wave A. That brings us down to 3983 to 3900, basically. So those will be the minimum what we're kind of looking for. But we're looking for it to come down in an A, a B, and a C. But it does have continued downside potential. It can get as low as 3842 or as low as 3725. Now, those would be, in my view, kind of the extremes. Market gets really pushed because remember, it could be if this is an ABC, then this next ABC, again on an intermediate degree, but then breaking it down on a minor degree, can also be a flat. So if this is giving us a signal, we can come all the way down, get close to 3639, not necessarily looking for it to break at this stage, but they can get down here and then turn and put in a pretty strong rally in a primary C wave. So again, we continue to look for additional rally, which could take the market back up to 4,600. It really can, but right now I'm not even looking at it. That's out there. Let's get through this correction first. Is this a tradable top? Yes. Is it still tradable? Yes. Now that we're getting the confirmation that that top is likely going to hold, because we do have that outside potential that it could turn and just rally. But I got to tell you, it's got to turn and rally, and it's got to become on some type of news other than what we're hearing and what people are now saying and what others are trying to grasp onto. Okay. So, but the ebb and flow of the market is based on human emotional reaction. So we cannot discount any of this. Now, where can we find support? On the daily chart, let me go back. Let's go back up to the 4-hour. That's where I was before. What we're looking here is that the market has broken below the 50s, heading on its way down. Our next support, its fib support at 4165. Price support already been, it's getting close to 4,200. We should find some support at 4,200 and then 4165. Then we have additional price support at 4112. And then we have the 200 EMA to 200 period EMA at about just above or just below 4,100. So the support level is going to be 4,100. Then we have fib support at 4064. Next support is going to come via the 200 period SMA, and that's at 4041. Below that, we have fib support at 3983. Below that, we do have price support at these different levels, but on a Fibonacci basis, we have it at 3902 or 3900. Potentially, yep, 3842, all the way down to 3725. Those exist, they're there. I'm not even looking at that deep right now because I still got to get through this. So let me slip it down to the hourly. What's it looking like for us? It's looking pretty good. We're now heading into the opening of the Asian markets. They'll react, and it could go. So upside, I think, will be recovery, will be pullbacks. But I think, in essence, until we get a stronger feel for it, I think that pullbacks are going to be, looking for shorts, looking for short entries. And again, I'm going to be using the 8 and the 20. Right now, though, on my hourly chart, the 20 is just getting ready to break below the 200 period EMA. So that's going to produce a little bit harder selling possibly in the NASDAQ, in the S&P. And we need to now see this on the hourly chart, the 50s, come down and do the same thing. then we will be in alignment. We're not quite there in the hourly chart just yet, but they are all beginning to point lower, with the 200 period EMA starting to arc a little stronger. So it's building a case for downside and the continuation of the downside. And again, right now we have all of our fibs, we have all of our where the moving averages are and what it all begins to look like. So I think that tomorrow could be a good day. Remember, just play the ebb and flow. Do not try to get too bullish or bearish. Let the market do that. And you're just playing the price action. Again, on my intraday screens, I'm trading off of a 1 minute, a 3 minute, and a 5 minute basis. And I use order flow profile within that. So I'm receiving information about where the points of control are, where value area high and low are developing, where that then moves during the ebb and flow. It helps you to determine where supply and demand is coming. Right now, we can kind of lean towards that demand is from the sellers. They're looking for the bids. They're looking to move this market down to a value area where the buyers will come in and take and do business. And so far, they're having the success, and they're doing that. As it continues to develop, so will these areas. So again, we have all the tools that at our disposal to actually make intelligent price action decisions about what's going on. So continue to trade using your rules, using your risk management. Risk management is going to be very important because the market's going to flip and fly. And it could be like going like, wow, how high could it go? How low could it go? You can go and look at that because you've got levels that you can base it against. I'm going to wrap it up right there. Primarily today's discussion was on how and why I feel the market is only completing intermediate wave A and not the complete primary B wave. If this was the entire primary A wave, primary wave B would be expected to start coming up as high as possibly 46, but 4,500, I would suspect will get there. So it's a good show. It makes a damn good play up for intermediate wave A, gives us the idea of what intermediate wave C is going to look like. But we got to get through that B wave first, and then we'll turn again and we'll head higher. All right. Thank you so much for watching today and for listening. I have one more video that I likely will produce and put out tomorrow. A good friend of mine, we've been trading buddies. We've worked together for quite some time. Rich Friesen from Mind Muscles Academy. He and I are working on putting together a course, which we're looking to likely start this course. It'll be a 2-month course, and we're looking to start it in September. We have a webinar on it coming up on Wednesday, the 24th. Look for an additional video from me tomorrow, which will also give you a chance to sign up for the webinar, and then you will receive advance notice, and then you also will be able to go in and look at the recording thereafter. But it's basically going to be geared towards strategies, how our emotions play in, and being able to do strategy building, trade. And so it's real time, real money, and real patterns, real putting things together on so that we make consistent profits. Okay, so our next update in terms of Elliott Wave will be on Monday, the 22nd.